Welcome back again, my dear professional students. Now in this session, we'll be preparing a statement of profit or loss and other comprehensive income. So what's the name of the reporting entity? That is very important. The name of the reporting entity in this case is Excellent PLC. So we will have Excellent PLC. We are preparing the statement of profit or loss. And other comprehensive income. And other comprehensive income for the year ended 30th June 2000. Now, the first item here is the sales. So, let's look at the sales. Where's my sales? Okay. They gave me purchases and revenue together. So, I have 940,000. If there is any returns in what? That has to be deducted. Returns in what? We don't have returns in what? Then we'll deduct our cost of sales. We have to work that out. So let me determine my cost of sales. And my cost of sales is my opening inventory. What is my opening inventory? Remember, we determine the opening inventory here, and the value is 13,550 as against the 16,000 that was recognized in the trial balance. Okay, so that would be like the adjusted opening inventory. It's 13,550. Adjusted opening inventory. That's 13,550. Okay. Now, but I need you to note something. Because in the trial balance, they gave us the opening inventory as 16,000. And you know, the opening inventory of this current period will have been the closing inventory of the previous period. So for us not to use the closing inventory that was used in the previous period as our opening inventory in this current period, it will have effects. There has to be an effect on the retained earnings of the opening period. You will see. When we are preparing the statement of changes in equity, you would understand what I'm talking about. So my opening inventory is 13,550. To that, I will add my purchases. And my purchases was given to me in the correction, in my trial balance. I was given my purchases. And my purchases was 195,000. This is it. 195,000. So let me go and have it there as purchases. As 195,000. My purchases is 195,000. If you have returns outwards, such should be deducted. If you have carriage inwards, it has to be added. So we need to check for that if we have returns inwards or carriage outwards. Returns outwards and carriage inward, I mean. But if you look at this very closely, you will see that we don't have any of the two. So since we don't have either of the two, then we now have to deduct our closing inventory. And what is my closing inventory? My closing inventory is given to me in the additional notes. That is where you always find your closing inventory. And I was given as 9 million. However, they also gave me the fair value of the goods as 40 million. So we need to take the lower of the carrying amount, which is 9 million, and the fair value, which is 40 million. Of course, you will go for the 9 million. So my closing inventory as given will be 9 million. So I will deduct my closing inventory. Okay. So with this, we can get our cost of sales. And that will be 13,550 plus 195,000 minus 9,000. So that gives me 199,550. 199,550. And that's my cost of sales. 199,550. $199,550. So my gross profit will be 940,000 minus 199,550. That gives me 740,450. 740,450. Having determined that, if there is any other income we will add, like discount received, interest received, dividend received, all that we are going to add. But in here, do we have any of such item? We don't. Hope you are looking at it too. In case I didn't see it, you need to tell me. Okay, we don't. And we didn't present any of such in our workings. Okay. So in the absence of that, we need to deduct the administrative expenses and the distribution cost. And the distribution cost. So, let me go and do the analysis of expenses so that I can allocate properly the distribution and administrative expenses. So, I will have my admin here. And my distribution here. So, we'll go and pick those items one by one, taking cognizance of our workings. Okay. The first item here is salaries and wages. And salaries and wages, we already worked it out. And we got the salaries and wages here as 70. So we have 70,000 salaries and wages. It's going to be admin, and it's 70,000. Then move on to the next item. And the next item here is maintenance cost. And that also, we worked it out here, the maintenance cost as 30,000. Please do not forget, this depreciation cost is a classification from the maintenance cost. So we have to go and add it to the depreciation amount. So this 30,000 will be the maintenance cost. So I will have maintenance costs. It should be admin. So what's my next item? My next item here is irrecoverable debt. That is bad debt. And it is 14,700. So let me go and have my irrecoverable debt. Irrecoverable debt. We call it bad debts. It's shorter to write. As 14,700. Okay? Put it as admin. So what's the next item? The next item I have here is plant and machinery at cost. That's an asset. This provision for receivables, we were told in the additional information that it is no longer required. So these provisions for receivables, we are going to not recognize it in our books because we're told that it is no longer required. Now this should be recognized from the books. Okay? It needs to be what? It needs to be recognized. It is no longer required. So we should not recognize it in our books. Also, the provision for depreciation, we'll come back at that. We'll pick all the depreciation items separately. We'll come back at that. All depreciation items. So provision for depreciation, delivery van at cost, provision for depreciation. So now let me pick the next item, which is delivery van expenses. And the delivery van expenses was how much? Delivery van expenses was 11,750. 11,970. 11,970. 11,970. 11,970. Now, after then, the next item was purchases, of course. Loan notes. We were told that they paid interest on these loan notes. So there will be a finance cost which we calculated already. Here as 10,000. So we need to recognize a finance cost. That finance cost should come in as a separate line item. It should come in as a separate line item. Okay. Then we have bank balance. We have furniture at cost. And we have sundry expenses. And this sundry expenses here is 39,500. So we need to go and recognize sundry expenses as 39,500. So sundry expenses is 39,500. Should recognize it under administrative expenses. Then, after sundry expenses, the next item I have here is trade receivables. Then we have goodwill, inventory, dividend paid, retained earnings, ordinary shares, evaluation surplus, and land. Okay, so the only item we'll have left would be the depreciation. So we need to determine the depreciation on each of these assets. And the assets we had were delivery van. We had plant and machinery. We had furniture. And there was freehold land, but freehold land is not depreciated. Now for the delivery van, when we're picking points here, we determine the depreciation charge for the year as 3,700. And lest I forget, there was an impairment loss on the delivery van of 2,300. But let me go and pick the depreciation of 3,700. So it will be under admin and it's going to be 3,700. However, for the plant and machinery, those were calculated up here. For the plant and machinery, that we determined the depreciation charge for the year as 3,435. So we'll have 3,435. 3,435. Then the furniture, the charge for the year for the furniture, we have it here as 2,700. For the furniture is 2,700. 2,700. And remember, the reclassification for maintenance costs that we did, you don't want to forget it. Which is 14,800. I hope you remember. 14,800. So it is 14,800. Okay, so we have picked all depreciation items. So the final item should be the impairment loss, which is 2,300. Okay, so we have picked all items. So let's total them together. Let me start with the admin. It has the major items. For salaries and wages was 70,000. The maintenance costs is 30,000. The bad debt is 14,700. The sundry expenses is 39,500. The depreciation, we have 3,700. We have 3,435. We have 2,700. We have 14,800. And I have 2,300. So it gives me 135. And for the distribution, there is just one line item, which is 11,970. So admin is 181,135. 181,135. 181,135. So 181,135 then 11,970. Okay, so if I net this, which is 740,450 minus 181,135 minus 11,970 gives me 547,345, and that will represent my operating profit. Then if I deduct my finance costs, which is 10,000, that will give me 537,345, which will be my profit before tax. And my income tax expense, as determined in my workings, is 165,000. So I'll go and have here 165,000. Then I'll get my profit for the year. Which is 537,345 minus 165,000, and that gives me 372,345. Okay. So I've prepared my statement of profit or loss. So what's the next thing I'm preparing now? Is my statement of changes in equity, which we are going to prepare in the next video. So in the next video, we will prepare the statement of changes in equity. So thank you very much. I will see you in the next video.